Hello, TradingView, YouTube, and my subscribers. How you guys doing? Welcome back. Let's do another weekly video. I got a lot to talk about. I'm going to try to squeeze it in there. Again, none of this stuff is scripted. I'm not a salesperson. Don't do any of that stuff. I just post what I see. This is my little diary, and let's get started. So the last video I did was December 13th. So we'll start here. All right, meme stocks getting massacred. Should not be a surprise to anybody. I've been pounding the table that these things are just garbage. You shouldn't listen to Reddit to get investment advice. Nobody listened to me, but whatever. Remember Tilray, the kiss of death, right? That's the one back here. I did on February 11th. Sure enough, it has gotten decimated. Okay, it's gotten destroyed. There's no if and or buts about it. It's just a disaster. Um, People should not get trading advice on, Reddit. QQQ. Remember when I said I wasn't convinced? Okay. Just kind of reposted this one because I think it's important. Um, and that's this chart back on December 7th when we had that big rally. Everybody's, oh, buy the dip. See, I was right. Yeah. Okay. Good luck with that. It just didn't look right. This is not the way markets typically work. Okay. Sure enough, since then, it's been a disaster area. And I'm not taking credit for any of these things because believe me, I tried to trade them. And I'm like, oh, look, I'm up. Oh, shit, I'm down. Oh, I'm up again. Oh, look, I ended up for the week, but what a disaster, huh? Who can predict this? If you're a bull, you're like one day you're like, oh, I'm a genius. Next day, I'm an idiot. Oh, I'm a genius again. Doesn't matter which side of the fence. Remember, George Soros says volatility occurs at turning points, right? So this is very volatile. Just want to make a small little point here for the support and resistance guys. There is no supply up here sufficient enough to create this resistance. Okay? So when you say, well, there's a overhead supply, and it's kind of like the fib people. The fib people, they're wonderful people, but they have a fib for any price. It doesn't matter. It could be down 50%, 61, the 20, I don't know, what is it, 23 or something, and the 129. No matter where price goes, we got a fib for you. Don't worry about it. And then we'll apply a cute story to that, whatever price level, that fib or whatever. And usually they put like two, three fibs on top of fibs. And then they say, yeah, and let me tell you about this story about these fibs here because the 23.6789 is significant because, and this is how we fool ourselves, my friends. We believe that this is analysis. No, it's not the way it works for me. For you, it might work. I don't know. I never gave you my money so you can show me that your system works, but it's kind of the same thing. The fibs and the support and resistance guys, there's not enough reason, supply, enough people that bought up here to create this resistance. So why is it becoming a resistance? I don't know. Don't care. For whatever reason, the market has determined that this price level, every time it hits, drop. Now, I can tell you that you keep knocking on that door and it doesn't go through, well, eventually you're going to puke it up. You can only knock on that door before you turn around and just walk away, right? So this is not good. Okay, this is not a good pattern. Let's just leave it at that. Now, having said that, the overall is still in an uptrend. So where's the bearish signal? Well, there isn't one. And that's the frustrating part because a lot of people are making huge bets and blowing themselves out. And one way or another, whether you're a buy the dipper or sell the ripper, doesn't matter. You're getting crushed. And again, volatility occurs at turning points, right? You oversize, you try to, make all the money in one day, and then you get wiped out. So please be really, really careful. Okay. All right. What else? We talked about Qs. Okay, this is private. Skip that one. All right. Momentum, danger. Okay, it's danger. It broke down. Doesn't look good. Uh, Look for this one to go lower. The momentum stocks are starting to get weak. Inflation. All right. It's worse. It really is. It's worse than what CPI indicates. Imagine now, you're a small company. You don't have pricing power. Okay. You don't even have to be a small company. You can be an airline. You can be whatever, cruise line, right? And your prices are going up 9.6% year over year. That's disastrous. How are you going to pass that off to customers? And yet we do have inflation. Well, it's transit. Say transitory one more time. You can't keep saying transitory forever. Uh, well, it's supply chain. Okay, well, let's look at supply chains. Okay, supply chains. Total business inventories to ratio sales. They are exactly where they've been before. In fact, you want this number to be low because you got to be efficient. Okay, you got more debt because of COVID. You have inflation, and you got to be efficient. So the fact that inventories to sale ratios are down here is good, right? You're efficient. Look at this one. Total business inventories. Well, they're rising. They're fine. They're right. We've been above this for since April, and we keep saying, "Well, supply chain." My friend, we're not down here for supply chains to be a problem. We're here. Stop saying supply chain. Supply chain was never the reason. Let me rephrase that. The cause of inflation. It was not. Was it a part of it? Sure. Sure. But they show you these pictures of Long Beach port and a bunch of ships. And oh wow. Well, do you know what it looked like before for you to be able to judge if there's a lot of ships in Long Beach? No, you don't. So how do you know that that's a lot? Well, because they told you and they showed you a picture of it. Supply chains are fine. Okay. Sure, there's always some parts of the economy that may have some supply chain problems. It's not the cause. The cause is excessive deficits. Period. End of story. Excessive deficits. Free money for all. Helicopter money. Uh, Lending. Don't pay us back. Don't worry about it. That's the cause. You can't sit on a couch, locked down, not going to work. Here's some money. Go buy some Nike sneaks and not expect to have some kind of supply problem because nobody's working, right? So it's natural. It's natural. The same thing happened all the way back here too in 2008, and here. It was much more severe back here as well. But we keep saying it. Why? Because politicians like it. Incubator economists that tell politicians what they want to hear, they like it. They don't look like idiots for excessively printing and QEing and lending out money to everybody and their mom. Okay? Full-time real weekly earnings was in fact transitory. We right back down. That's transitory, my friends. Inflation is not transitory. Okay. Look at household debt starting to rise again. Here we go. But even with this little bump, we're so way below what we used to be. Now remember, we had inflation in here. Okay. And now we're getting inflation in here. But the deficits here were not excessive. It was private money creation that was excessive. Different story. Show you one more chart. Velocity of money. Look at the velocity of money. Okay. As labor force participation drops, and they're telling you, look at the unemployment, it's great, it's 4.2, it's wonderful. Yeah, but with a smaller labor force participation. It is caused by excessive deficits. The velocity of money is falling. Why? Because the money funnels through the productive economy via the profit mechanism and goes to the top 5%, the savers. So you end up in a situation where you're going to pump up asset prices while the productive economy is suffering. And meanwhile, they're showing you unemployment rate. Look, it's 4.2. It's great. No, it's not great. It's not great. It's in the gutter. And the velocity of money is in the gutter. So does stimulus work? No, because there's no velocity of money. You see? That's a problem. And as a result, you see that the labor force participation is falling along with it. It peaked at the same time and it's falling at the same time. So don't give me we have labor shortages. Yeah, right. We have labor shortages. We may have labor mismatches. Yeah. We may have had people that said, you know what, I'll stay unemployed a little bit longer and see if I can get a better job. Sure. These things are symptoms, they're not causes. Okay. Excessive deficits were the cause. Anyway, um, where was I? All right. So F firm momentum is going down. All right. Now, corporate profits, in my view, because uh, there's less deficits. There's even though the private sector borrowing is rising faster. Okay, we're still way below the average, as I showed you. But we have to go back to that chart that I kept telling you about banks, that you really have to start to worry because this thing is crashing. Okay, it's not letting up. So that means there's less profitability. Think of this as a faucet, and the further down that it goes, the more you're tightening the faucet of money. Okay, now this is good money. Why is this? Why is private lending good money? Because nobody goes out and borrows $100,000 and just leaves it in the bank, right? They go out and buy something, or they invest in something, or whatever, right? So it's productive money. Okay, it's in the private sector. It's not military spending, for example. Okay, now that doesn't create jobs, but it's not the same thing. Right? This is more productive. So as this starts to fall, you end up in a situation where it gets complicated because the private money creation will start to suffer. And as a result, the profit mechanism starts to suffer. And as the profits mechanism starts to suffer, I, I, I assume, okay, let's put it that way, that corporate profits will start to fall. Okay, they'll start to go back down. And that's going to make the earnings per share yield start to fall. Well, we're raising interest rates. And you start squeezing there. What happens? Well, market starts to go south. Anyway, it's a deeper discussion. It's not for this platform. Ballsy that I'm calling Apple short, huh? It's suicide. It really is. It's trading view, technical analysis, fundamental analysis, suicide to do something like that. And I say it. And believe me, I don't want to be wrong. I don't. There's nothing worse than being ridiculed and humiliated when you're wrong. And what do I want to do? Come back and change this, right? I can't. So I gotta eat it. But the chart is what the chart. This is a classic topping pattern. Okay, classic topping pattern. So look for this one to go down. Same thing with Salesforce.com. Okay, it's breaking down here. This doesn't look good. Okay, you have slightly higher high, and now it's starting to fail. Breaking the structure, back into structure from the longer term. So the likelihood is, if the market, and big if the market starts to tank, this will start to come unraveled as well. Okay. Key area in Turkey. Let's go back a little bit. All right, we broke a key area. Now, I'm going to talk a little bit more about this in the next video, but we broke in a major key area in Turkey, and things are not good. 85 million people will suffer, and it's really bad. Okay. Watch the video. What would I do if I were the market? How would I screw the maximum amount of people the maximum amount of time? Go back and watch it, and that should be it for this video. 14 minutes. That's good. I'm very proud of myself. I can go on for hours talking about this stuff. And sometimes I do ask my subscribers. But anyway, be really careful out there. Caution, caution, caution. Have a happy holidays. This fun time with the families. Be careful with Omicron. And you know, it is what it is. You know, it feels like we're right back to step one. Uh, it's horrible. It's horrible. A lot of lives are being destroyed. You know, especially for the youngsters. Anyway, and I don't mean them getting sick. I mean job opportunities and so forth. Anyway, let's see what comes this week. Don't listen to Santa Claus rally stuff and oh, you know, it was Black Friday and the sales with this and don't waste your time with that stuff. Okay, that's great for marketing. It's got no validity. Okay, if it goes up, it goes up. It's not because Santa Claus rally, and if it goes down, what are you going to do? Blame Santa Claus? I mean, come on, be more sophisticated than that. All right, we'll see how this pans out. We'll see how this week it behaves. Uh, so, you know, again, it's getting into that weird. Everybody goes home, vacations, and markets get a little funky. So just be careful. All right, that's it, guys. Thanks a lot. Take care, and I'll talk to you soon. Bye bye.